Good evening, everybody. Mike and Dariusz again here from Albion Financial Services Limited. So I know last week we spoke a little bit about mortgages. We get more inquiries, and I think there's more need right at this moment in time for people's protection needs. And I know there's all sorts of things you can see online to do with opera singers and meerkats and all that sort of stuff. And people go online and the price of a bit of insurance, they're not really sure what they need, how much they need, what's the best, why is stuff more expensive than the other. Little word of warning on that: 3 things you should never skimp on: surgeons, parachutes, insurance. Can't talk to you about 2 of them. I'm going to talk to you about one of them. Tonight, we're going to do a role reversal, and Dariusz is actually going to ask me a couple of questions. So again, 10, 15 minutes, something like that. But as usual, anything you want answering, please drop us a line, and we'll do what we can to get back to you. So over to you, Dariusz.
Good evening, everyone. Today, as Mike said, we're going to talk a bit about protection. If you have any questions, please ask them in the comments. If we don't reply during our event tonight, then we'll reply after. I have a few questions for Mike. He specializes in protection. He likes it better than me. Not that I don't like it, but
it's my geek.
His field where he specializes in. So, Mike, can you tell us who needs protection? I'm very young, as you can see. I'm not planning on dying. I'm not planning on going ill. Who needs protection these days?
Everybody has a need for some form of protection or another. And we'll cover some of the other ones in later sessions that we'll do. So whether that be income protection, critical illness, what have you. Tonight, obviously, we are talking about specifically life insurance. Now, everybody knows the date of birth. Nobody knows the date of death. You don't know when it's going to happen. We've all been on the motorway and we've got stuck in traffic where we've seen a bad accident, where the airbags have blown, all that sort of stuff. Where you hear about, the air ambulances coming in and all that type of thing. You don't know what's going to happen to you and when it's going to happen. So if you have anything at all that you need to protect in the event of you not being here, you have a need for life insurance. That could be a mortgage. It could be debt. It could be family. It could be wife, children. Whatever you want, you have a need for life insurance. Now, to dispel
and if I'm single without family, just on my own, do I have a need for any protection?
If you've got something like a mortgage and you don't want any of the debt to be passed on to your next of kin and that sort of stuff, then yes, you also have built into life insurance, you have terminal illness. A lot different to critical illness. That means that if you are diagnosed with an illness that is terminal, whether it be cancer or whatever, then you will get an early payout on it. So you could survive for another year, 18 months, something like that after that. But it just allows you to get your affairs in order. So that there is generally a need for it, I would say. But if people ask me, is it when am I like, what's the statistics on when I'll need to claim? To give you an example on that, so currently, lifespan of a male in this country, 78.6 years, women 82.6. Now that has fallen 6 months since 2019. So in 6 years, life expectancy has come down 6 months. And that will be to do with lifestyles. We all live unhealthy lifestyles now. We're eating ultra-processed food. We've got these things strapped to our ears and all that type of stuff. It all has a massive effect, whether it be air purity, whatever you want to put it down to. Life expectancy is dropping. So don't think it's never going to happen to you. And those figures, by the way, they're an average. That takes into infant mortality, right up to people living into the hundreds and all that sort of stuff. So slap back right down in the middle of it all. 78 for a guy, 82 for a woman. But, and we'll come into this on a later session, average age of a claim for a critical illness is 47. So that's when you get cancer, heart attack, stroke, MS, anything like that, which could lead to it. Average age for that is 47. But we'll come on to that another day. So yes, I would say 99% of people will have some sort of need for it.
Great. So if we all need it, how much do we need? what's a good approach? Should I ask my neighbor? How could you establish how much protection is needed?
What I would do is I'd go and see your mate in the pub who knows everything about it. He was giving legal advice to someone the other day, telling them not to pay a parking ticket. So he's not only a lawyer, but he's also a financial expert as well. So go and speak to him in the first instance, see what he thinks. Then come and speak to an expert, because there is
a dentist, maybe a dentist.
Yeah, speak to your dentist. There is no hard and fast rule, but there is rules of thumb. And when I sit in front of people, we look initially at, first of all, your mortgage. So saying that you're a young man, you've just got married, you've got kids, you've got a mortgage, all that sort of stuff. First things first, you need to protect that mortgage. So if you do die, your wife and kids aren't going to be thrown out of the house. I had a conversation with somebody 5-6 years ago, just before lockdown, and I had it in the head that the government would pay the interest on her mortgage, so she could flick it to interest only. No, but this is people's real perception of what they need. So you protect the mortgage in the first instance. After that, you've got to think, everyone's talking about cost of living crisis, your fuel bills, you've got children to bring up, all that sort of stuff. Your children are young, your wife's at home still. They've got no mortgage, but how do they pay the bills with no income coming in? So you then look at something called family protection. So how this works is there's two different types of life insurance. There's decreasing term, which you take a set amount over a set period of time, and it decreases in line over that set period of time. So very easy figures, 200,000 over 20 years. Theoretically, after 10 years, it should be down to about 100,000, because that's in line with where your mortgage is. If you've got family protection, all that sort of stuff, you need something where it's going to give you a more constant income. So for that, we have what's called a level protection plan, and that will pay you out the same amount of money for that term. So you can index that, link it to retail price index or whatever. That will mean that £100,000 value now in 20 years time won't be worth what it's worth now. So you can index that, and your payments will go up slightly in line with inflation, but so will your payout. So that's the other option to look at that.
I think everyone should think about it, because like £50,000 20 years ago is worth something else today. So
massively so.
Yeah,
massively so.
I don't think a lot of people even talk about it or think about it. If you think today £200,000 in 30 years' time, that £200,000 will have a very different value to what it is today.
If you look at £100,000 20 years ago, that will now be worth 220, something like that. That's the real terms of what you'll need. And the amount of times I go and see people and say, right, what life insurance have you got? And they go and fish out some statement that they got years ago, and they look at it, it's related to some house that had 3 moves back and all that sort of stuff. They haven't got a clue, absolutely no clue whatsoever. But so going back to the sort of rules of thumb, what I would say is, when I come and speak to people, I look at the mortgages, look at any outstanding debts that they've got. Then, as regards children, all that sort of stuff, your children tend to be reliant on you until they're 21 and they've finished their full education.
I think these days, your children rely on you until they're 40 and move out.
Unless you're my son. I've got one at 28 at the minute in the room.
Is he likely to move out anytime soon? Or no?
No, he did a few years at university, but he got fed up with buying in his own clothes and buying his own beer when he goes out. So no, he's welded in here. But rule of thumb, you should be financially responsible for them till they're about 21 years old. So if you were to think a little bit of quick maths, how much would a child cost you per month to bring up? If you were to say £500 a month, that's what should need. No mortgage, £500 a month per child to bring the kids up, whatever. Very easy figures. 2 children, that's £1,000 a month. That's 12 grand a year. And if you times that by 21 years, that is £252,000, £252,000, £250,000.
Your math is better than mine, but that's what I read, that I have 3 children, that raising one child, if you have only one, is about £250,000. It's a bit cheaper for the second and third child, but still, if I have 3 children, it could be £500,000.
Oh, it's right. I mean, yeah, it is slightly cheaper for a second child. You're not buying stuff first time round. Obviously, hand-me-downs, child of the 60s, 70s and 80s, you say hand-me-downs in our family. Unfortunately, I've got 3 sisters all older than me, so I looked a bit weird going to school. But yeah, it's a very real thing. You've got to think of this sort of stuff. You don't want people your wife having to sell the house because she can't afford to live. So you're looking at £250,000 now. These are rules of thumb. Obviously, we can put together a decreasing term life insurance for your mortgage, couple that with a bit of level term for family protection, all that sort of stuff. We can do all the science for you, and put it all together for you, no more cost than what you'd get it for online. You just get a little bit more of an expert advice and a sounding board. You'll probably do the same, Dariusz, when you do speak to people and you say to them, how much do you think you'll need? They haven't got a clue. And it's right. It's not something. The reason I got into this and I get a little bit geeky about it was I was diagnosed with something over a decade ago, and I thought it was some form of cancer. So I looked at what I had, having relied on a financial advisor, and I didn't have the cover I thought I had. And I'm sort of left there thinking, I was in a very, very well-paid job, but I didn't have what I thought I had. So now that's why I try and go and speak to people face-to-face if I can, or happy to do it on Zoom, but put some science to it and sort of give a worst-case scenario. If the worst happened, what would be utopia? What would you need? Get it all priced up. And if it's too much money, ski downhill and take some bits off. But let's look at what, to relieve all that stress. You're just burying your husband, you're just burying your wife, whatever. All that stress is gone. Finances, what do you need to survive? And it's not as much as what people think.
It's always like coming up with a figure that is ideal, and then if the budget is not there, you have to decrease the amounts that people are insured for. I read something which I find not funny, but no one ever said, oh, my insurance payout was too high. So when you think of your insurance payout, no one will ever complain to you, Mike, if you do, I don't know, £500,000 for someone, and someone gets to use it, the family, saying, Mike, why did you do £500,000? We wish we had a smaller payout. Yeah.
Can we give some back? We don't need it all.
Yeah, but it's always a balance, and then £500,000 can have premiums that are too high for someone, and then we look at having lower premiums. But that brings me to my next question. Is it expensive? Is insurance expensive? Is there differences between life, critical illness, and income protection when it comes to price? How does that work?
So we'll cover some prices on critical illness and income protection and that sort of stuff on another session. But because we're looking at purely life today, what you've got to think about, when I said earlier that people's life expectancies are sort of in the late 70s and early 80s, what that means is the insurance companies don't expect you are not a risk at 20, 30, 40. Obviously, the older you get, the more of a risk you are. But certainly when you're a little bit younger, because you're not such a risk, it doesn't have to be expensive at all. And here's some I made earlier. I've ran a few figures for you, Dariusz. So I've put in here, I've picked 2 random people here. So I've got an employed man or woman, doesn't matter, at 25 years old. He's 5'11", 14 stone, I wish. And I've done a £250,000 life plan over 25 years decreasing to cover the mortgage. And I've done £250,000 level over 21 years. How much do you think that would cost?
Oh, you got me there.
So he's 25 and he got 25 years, £250,000 decreasing, £250,000 level.
The decreasing one, I don't know, £15.
All told, conjoined, £9.67 it starts at.
Oh, that's 50% less than I.
£9 under a tenner. So that's £250,000 mortgage cover, £250,000 family protection for 25 years and 21 years. I mean, there's all different bits and pieces. You can go right up to 20-some pound with different companies where you get all bells and whistles, but a standard life insurance plan. Now, obviously, if you've got ill health or you've got some pre-existing conditions, something like that, they might rate that because you're more of a risk. But for 25
or if you are weighing a bit too much for your height,
all that sort of stuff, or if there's a family history of cancer or something like that. And what's interesting and this is where it comes handy using people like me and you, is if there is a family history of cancer, say your mum and dad both had cancer at 62. Some companies ask about family history from 65 onwards. Some ask from 60 onwards. So we can cater around that. We'll know who to go to get around the questions. It's not what it's what you don't say. Don't over tell. So it's not asking it. Don't tell it.
Yeah.
You've got to tell the truth, otherwise you won't get a payout. But if that had at 62, now one parent you'd get away with it. Two parents they're going to start and rate and send you for tests and that sort of stuff. But there is companies out there all have slightly different criteria, and that's where it comes in handy to us. Now, my second quote. Me, 55 years old.
Did you use your BMI, Mike?
No. Okay. No, we don't talk about that. The wife might be watching this. She thinks I'm still 14 stone, like 14, 11 when I got married. So 55-year-old man. I've done it just the same, 5'11", 14 stone. So I've done him because you'd like to think he's got a bit less of a mortgage and kids are a bit more grown up. I've done £150,000 decreasing over 25 years. And I've done £150,000 level over 25 years. So this would be to give to his wife. So 300,000 quid, half of which is decreasing, half of which is level. That's coming out at 43 quid. So a tenner a week. £10 a week for someone my 55. You retire at 60.
And also, if you compare it to a 25-year-old, it's 4 times more. So yeah.
But there's the risk you are older. Do you know what I mean? And obviously on that, on a 25-year term at 55, you're talking of getting up to 80, and that's the roundabout. You're coming into the realms there. I'm only supposed to live till I'm 78.6, so that's taken me to statistically a payout. So I mean, £10 a week. What's that? It's a pint and a half in the pub now. It's 2 cups of coffee at Starbucks. It's crackers. It's crackers. But I go to people's houses, and this is where, I do get a little bit sort of not irate, but just disappointed, really, where, they've got every Sky package is worth £150 a month, and the kids have got this, that, and the other, every iPad under the sun, and they won't spend £10 a week.
If he's insured, then the person.
Yeah, they won't spend £10 a week protecting it all. It's crackers. It's crackers. So to answer your question, I mean, like I said, 25-year-old there, under a tenner a month. 55-year-old, a tenner a week. I mean, it is absolutely.
I spend more on a walk with my daughters because they talk me into buying them things, on a walk. So
it's easy
more
done.
than £10,
It's easy done. It's like me. I look at my phone and I'll get a new app and I'll do the light version. That's free rather than pay like £1.70 or £2 to upgrade it. But then I'll go and buy myself a coffee at £2.20 the following morning. It's what it's value for money. But just think. When I do come and say I try and get obviously get husband and wife both sat there together, and get their input as well. But I mean, it just to show there that there's everybody has a need for it. Every company underwrites things differently. Alcohol's a big thing. There's a company out there that if you do more than a bottle of wine a week, they will decline you on critical illness.
You're not with that company, Mike, then? Or no?
No. But there is a company out there that does 6 bottles of wine a week before it'll even rate. So again, dependent on your lifestyle, there's something somewhere, and we do all the ringing round. I spend half my time speaking to underwriters and that sort of stuff. What about this? What about that? Got a guy covered who's HIV. With HIV, you can get life and critical illness now. If you're HIV positive, providing you're taking the drugs and it's all controlled. So there's not much really. We can't get you. You just need to speak to somebody that knows what they're on about, and it doesn't have to be that expensive.
Great.
Just on that, sorry to interrupt. You must obviously know your medical history. So there is questionnaire that we will need to ask you. If you don't know it, that's fine. If you've got some sort of congenital heart disease that nobody knows about, or you're estranged from your family and you don't know that your dad died at 57 of a heart attack or something like that. If it's not in your medical record, then that's fine. But you have to sort of tell us to the best of your knowledge exactly what is in there. Otherwise, it can hinder a payout.
That point brings me to the question: do providers pay out how likely is it you're gonna get a payout? Is there a small print? Do they look for reasons not to do a payout? What is the main reason that there is no payout?
The main reason is non-disclosure. The main reason is non-disclosure. But last year, on average, nearly 97% of life insurance claims were paid out and 92% of critical illness claims. Now, the 2% and 8% respectively that didn't pay out, they will be down to non-disclosure. And you know what? Sometimes it's daft things. It's not so bad, but people saying that they're a smoker when they're a non-smoker because they think it'll be cheaper. There's no point in lying, because the first thing you do when they lie is they'll do a cotinine test. If you've got nicotine in your system or drugs in your system or something like that, they just won't pay out. So it's not that they look for a reason not to pay out. You just haven't told the truth.
Non-disclosure, yeah. And about that, it's not, they do not check it when you apply or when the plan is on risk. It is checked at the time of claim. So they go for your medical records. So you might have a policy, but I've seen it a few times. Someone had cancer, recovered, fully recovered, and forgot to mention it in the medical, in the medical questionnaire. And they've been paying a policy, I don't know, £100 a month for 10 years. If there was a claim connected with cancer, especially, it wouldn't pay out. So that's how important this full disclosure is. And if you said, Mike, like someone doesn't remember, well, I don't know, I broke my ankle, I don't remember which year was that. I don't think that would change much in my policy. But if I had a heart attack, then I would definitely remember when I had it, and some details around it. So basically, if you forget about a very small thing, it won't affect the payout, but if it's a big thing, definitely you'll remember that. If something health-wise happened to you and it was massive, a big thing, you would remember that. Unless you have sclerosis or something, then I don't know how insurers look at that. If you have memory loss and then that's why you didn't remember.
I think you'd struggle to prove that. But even if you have had pre-illnesses, pre-existing conditions, I've had people that have had sort of cancer 5-6 years ago, have still managed to get them cover, but they're not covered if they get cancer again. So if they have a heart attack or MS or anything like that, then they're covered. So we can get you cover even if you have a pre-existing condition, or we can have a good chance of getting you cover even with a pre-existing condition. But like I said, there's that many companies out there, it is a bit of a minefield. Don't just go off price. Don't look at the opera singers, all the meerkats, anything like that. It costs you nothing to speak to an expert, the likes of me or you. You don't pay any more than you would online. We have full price parity. We don't charge a fee.
Yeah, Mike, that's what I wanted to say. I mean, I know the answer, but if you go through an advisor or moneysupermarket.com, do you pay any more if you speak to an advisor?
No, full price parity. We don't charge a fee for talking to you about your protection. And like I say, I'm like, I'll drive to the far end of the earth to come and see you and chat. Just, cost you a tea bag and some hot water and a bit of milk.
How much does then, I mean, I know the answer, but I'll ask you for our viewers. How much does advice cost and how do you get paid from it?
So the advice doesn't cost, obviously, the customer anything. What we get is a small commission based upon you taking a policy out. So our advice is free. We come and sit with you. All that's free. If you decide not to take a policy, it hasn't cost you a penny. It doesn't cost you anything out of your plan. Whether you went to, for easy, because alphabetically Aviva, and you did an Aviva plan online, that was £50. It would still be £50 with us, but Aviva just pay us a small commission for placing the business with them. But all companies pay the same commission, there or thereabouts. We're not, so what that means is we can't give you to one company rather than another because they pay us a better commission. We have to justify by way of suitability reports why we've recommended certain companies, the reason behind it, the science behind it, and all that sort of stuff. So basically, it won't cost you anything up front. We get paid a commission upon you taking out a plan and paying a premium.
Great. I don't see any questions. So if any other questions show up, we will answer them, whenever they show up as comments under this video. So that's a wrap. Yeah, it's a weekly thing. Next week we'll talk about something else. So
critical illness. Critical
illness next week. Oh, it's already planned. I didn't know that one. So we'll talk about critical illness next week. If you have any questions about that, please reach out to us. Mike has his fan page. He's all over various social media. Under the video, I will put a link to a calendar when you can book a consultation. And as Mike said, it doesn't cost you anything. It's whether it ends up with you having some protection or not, but you will get very good advice. And if you have policies already, Mike can have a look and see whether they still fit your circumstances.
That's the other thing, that are they still relevant? You know, we can do a sense check on them.
Especially if you've had a policy for 10 years, it might not be relevant to your personal circumstances. Okay, so thank you very much. Mike, any last words?
Dzień dobry. No, wrong one. No, just give us a buzz. We are here. We're here to help you. Our advice is free. If you just want a confidential chat without any figures being quoted, just want to run something past us, it's absolutely fine. I'd rather you get in touch and we answer some questions and you do the right thing and get a payout when you need it most.
Great. So thank you very much. Have a good night, and we'll see you next week.